Welcome to Black Mountain Stocks. I'm Colin, and on this channel we do market news, stock news, and updates. And today we're going to take a look at Jeremy Lefebvre, his YouTube channel called Financial Education. You guys probably know Jeremy Lefebvre. Financial Education is connected to Millennial Money with Meet Kevin, Graham Stephan, and Andre Geek. What we're going to do today is take a look at some of his top stock picks from 2022. So let's get into it. The first stock that we're going to take a look at is Tesla. Now everybody knows Tesla. They're the top EV maker out there. Some of the headwinds that they faced with China as their plants have been shut down. They're starting to look like they may open up a little bit more. That might help them in 2023 at some point. We also know that the Fed rate hikes with Jerome Powell and the Fed, they've been saying that they're going to be doing more rate hikes, and that's hurt stocks like this in the tech world. And also, we all know that Elon Musk has sold his Tesla shares, billions of dollars worth of Tesla shares, and he is owner of Twitter now. So investors don't like that, and the stock is down 51%. So next stock up we have is going to be Google, Alphabet. This stock is down 36% on the year. Now, Google, we all know that they have, the Chrome platform, the YouTube platform, and cloud. Very good company. This could be one of the ones that rebounds in 2023. And the stock is down 36% on the year. I believe that Google, Jeremy Lefebvre has gotten into this stock and some of the big high-tech market cap stocks this year. He's trying to get out of those speculative stocks. We'll talk a little bit about those at the end of this video. And for new investors, I'm going to kind of talk about some things that you can stay away from and what you can look for to avoid some of these speculative plays. All right, next up, we have PayPal. Now, PayPal, fintech company, what they do is you've seen them online when you go to purchase any type of goods online. PayPal is typically going to be one of the first ones to come up as a payment system. Now, PayPal, that is good for them because they have a large moat which protects you as an investor, because it's just hard for other fintech companies to grow into what PayPal's already done, and I believe PayPal will rebound as well. Now, PayPal, they are down 62% on the year. Tough year for fintech, any kind of payment systems like this. They're all down quite a bit like this. And the next stock up that we'll talk about is going to be Meta. Jeremy Lefebvre, he has gotten into Meta and Facebook. Everybody knows what Facebook does. The biggest headwinds for them this year is Mark Zuckerberg has really tried to transform this stock into basically a whole different type of company going into the metaverse. It's just a very large investment, and it's really spooking investors. And that one is down 64% on the year. So very, very tough year for a lot of these FANG stocks. Next stock that we'll talk about is going to be Amazon. Amazon is a great company, biggest e-commerce company out there. They're currently down 47% on the year. With the Fed rate hikes going on, and Jerome Powell has said that they're gonna keep doing these rate hikes. There's a lot of talk about recession out there. Obviously, that would hurt the consumer, and the stock is suffering, down 47%. Now, the next stocks I'm going to talk about, they're going to be a little bit more speculative. These are Jeremy Lefebvre's spec plays. Well, let's get into those. The first one that we'll talk about is going to be Palantir. Palantir Technologies. Now, this company right here, what they do, they operate through commercial and government segments, security, data, things like that. A lot of people are just now trying to find out more information on Palantir, and we'll see how they do. There's not a lot of information out there on actually what they do, and there's more information coming out all the time about this company. They're down 61%. The next company that we're going to look at, Jeremy Lefebvre's holdings, is going to be Honest, the Honest Company. And what they do, they're a consumer retail company. They sell diapers, skincare, makeup, stuff like that. Jessica Alba, I think, is one of the original founders, the celebrity. She was the one that originally found this company. And what I've seen about these celebrity type of companies is they do good in years like 2020, 2021. These stocks have, with these celebrities that back them, they tend to go down in down years. So you kind of got to watch out for companies like this. This stock is down, at this point, is down 63% over the past year. So the next company up that we're going to talk about is going to be Corsair Gaming. And they're a gaming company. You can find these products mostly what I've seen in Best Buy. They have kind of a small section there. And Best Buy and other, you can also go online and find these products as well. This company is down 30%. Next up, I believe this is a newer position for Jeremy Lefebvre, and that is Fubo TV. Now, Fubo, this one, wow, it's down 86% on the year. The competition is fierce in streaming. It's just one of those things that this company has to build its subscriptions up over the years to come, and we'll see how they do. Down 86%. Tough year for Fubo. Highly speculative play. A lot of people play options and day trading on this stock. And what I wanted to show you, a lot of people new investors get into these companies and they don't realize they're speculative plays. If you want to take a look down here, anytime you see a minus sign down here, a negative sign, this company, generally companies like this are losing money. And this is something that new investors, you want to avoid. Try to go into the larger cap stocks, the safer ones. Any of these speculative plays are going to be very, very tough to play out in the coming future with the rate hikes and stuff like that. All right, so Fubo down 86% on the year. And the next play that we have for financial education portfolio is going to be Oatly. Oatly, my Goatly. And Oatly, what they do, they are an alternative to milks, and you can find these in most grocery stores. Not a horrible product, probably not the best out there. There's a lot of competition in this space too. And Oatly is down currently 82% on the year. And last but not least, we've got Tattooed Chef. Now, Tattooed Chef, what they do is they create products that don't have any meat in them. They're an alternative to meat. And let's take a look. So they were founded in 2017, and it includes ready-to-cook bowls, zucchini spirals, rice cauliflower, just all kinds of different products there that they put. Mostly you'll see these in Target. I do think that they'll be in some other grocery stores as well, Walmart, maybe Kroger, Albertsons, basically any type of large retailers. They're trying to push their products into more shelves, more SKUs, and this company right here has just gotten hammered. They are down 92% on the year. So very tough space, very competitive in the food world. Uh, these larger companies, they just don't give up their shelf space. And Jeremy Lefebvre has had a very tough time with Tattooed Chef, down 92%. So what you can do for newer investors, if you take a look down here, see anytime that these companies are, you see the negative sign right there, that basically means they're losing money. Yeah, so that's Tattooed Chef, guys. As you can see, some of the last stocks that I mentioned, these are more speculative plays. These are the ones that you want to stay away from. Certainly towards the end of this year, you want to stay away from these. And then 2023, stay away from these and look more into the defensive plays and the larger market cap type stocks, guys, and you should do just fine.